I want to bring in Racquel Oden, head of international wealth and global private banking at HSBC, the United States. They call it U.S. United States. What do they say? Do you have any thought in the world that Mr. Powell is going to surprise us?
So I have to lean with what you said previously. We don't believe that we expect any surprises today. We actually believe 100% that he would not actually be changing the Fed rate, changing the rates at this point. But I wouldn't say that it's going to stay true for the rest of the year, right? We're still leaning into potentially 3 rate cuts by the end of the year, but May, almost a 0 probability. June, still slightly. And the question is, will we get to 2 or 3 by the end of the year?
I guess the bigger question is, when do you think, if you think, or when do you think there's going to be a shift in the economic numbers that we're seeing as it relates to tariffs, tariff fears, and everything else? Because we haven't really seen that yet.
I completely agree with you. So I think what we're all sitting back and watching for, which is if we take a look at the long term, I'd say there's better optimism. In the short term, continued volatility. The key things that you said, there are 2 things we need to resolve, which is tariffs. Is it just policy negotiation, or will they be permanent? And then second is the inflation components of it. And so there's 2 things that we're trying to balance right now with our clients of understanding how do you handle this uncertainty, knowing we're going to see continued volatility in the short term.
So what numbers would we have to see for Jay Powell to actually start to move this summer?
Well, I think we'd take a look at the unemployment rate, and which we're all looking at right now, which is 4.2. So if that went above 4.5, right, and you have also 2 consecutive quarters of GDP being negative, then you start saying we're heading into a recession. And then, of course, you take a look at where we are from an inflation standpoint. We're at 2.3. So, again, within line.
But is there any chance, I mean, the president would tell you that Jay Powell's behind already. So the question is, does he know something that everybody doesn't? Does he know that the market, the economy really is actually going in the wrong direction? Because I would argue that would be the only reason you go do that right this second.
I think if you got a 55 print on oil, I would cut. I don't even, it's more, I would do it on that side of things, not the growth slowdown. Because you're able to. If you can,
yeah, but some people would say that.
But if inflation's not a problem, you should have rates as low as you can get them.
Yeah. So you think you have to watch the inflation, but at the same time, the question is, we're not saying that he won't make any cuts, just not in May, and potentially less likely in June. So I would say there is definitely potential for cuts.
Like they have to see the hard data? Is that
they have to start seeing hard data, right? And I think what's also important is where do we land on tariffs, right? So the tariffs is a very big, important policy decision.
If they settle all of those things,
if they settle all that, and we see great negotiations going on right now, in Switzerland, there's optimism again around the tariff policy. So I think that is a key indicator.
That's one thing I think is really interesting. The Fed gets so much criticism for believing it, but obviously the markets believe some of this too. We have rebounded off of those the severe lows that we saw last month. So obviously the market thinks that something could get settled, too.
So what I'd say is, back to my statement of extreme volatility over the next, year. What we are seeing, though, quite honestly, is I call it this is an active administration, so we have to be actively managing our portfolios. So, like you said, the markets did massive dips. We've had at least 10, more than 1,000, what I call intraday dips within the market since January. So if you think about that extreme volatility, it is because of all the policy that we're seeing. It's not the fundamentals that we're looking at that's causing us to be concerned about this.
You think about tariffs, I don't know why, it's just now I'm more worried about what it does to the global economy than I am about inflation. It almost, I guess I'm convinced inflation is a monetary phenomenon that you, I don't know, maybe I'm brainwashed to think that, but a one-shot deal with it just doesn't bring the type of wage price spiral that you get from monetary mistakes.
So I think tariffs have taken on a very strong narrative for a lot of us, like you stated here. The thing that I always have to remind myself is if you think of our imports, it's only 10% of our GDP. There are other countries that are massively impacted by tariffs. But at the same time, what we're more concerned about with tariffs is the fact of if corporates start passing that cost on to individuals, then you start getting into inflation. So it's really the impact of tariffs on multiple facets, but not really from an importing GDP standpoint. There are other countries that are dramatically more dependent on imports than we are.